Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, May 17th through Friday, May 21st, 2010. Well, folks, quite a change in the last couple weeks. The markets have gone into hyper mode as we've seen them slam to the downside, going as low as 105 on the Thursday before last, where the Dow was down almost 1,000 points. Now, even last week turned out to be an insanely volatile week. The VIX moving up towards 30 to 40 range continues to tell us that the volatility is going to continue in the short term. And again, we have to look at that and expect these continual movements of over 100 points per day. And again, just to repeat, guys, 10 of the last 13 sessions, I believe, we have had a 100-point move in the Dow at least for the day. And again, we've seen some bigger ones than that, obviously. And Friday, to name one, was at least 100 points, as we saw again the Dow closing sharply lower, down 163 points or 1.5%. NASDAQ down 48 points or 2%. And the S&P 500 down about 22 points or 1.9%. So bottom line is this, folks. This is the daily chart. These are the master levels. I'm not going to cover these master levels in depth because, again, they're for my premium research center players here. And again, you can join the research center by going to InTheMoneyStocks.com. Get all the inside information that you want to know. Now, anyways, you can see, again, the market from basically February 5th continued to slowly uptick, but that was just a little bit of a setup as the institutional players were starting to unload into the retail investors. Understand the game, how it's played. This is so important. Don't be caught on the wrong side of the trade. In any case, you can see again, once this trend line was broken right here, you had a nice in-spirit bearish pattern develop underneath this trend line, the pink trend line, white trend line scanning up. You went right to a double top right there, and then the market went down one day, down 2 days. That's confirmation, folks. That's an InTheMoneyStocks proprietary methodology signal right there. That told you that this market was going to get slammed to the downside. Again, we made that call, nailed that call, and sure enough, the market did drop sharply to the downside. As you can see, you had a 1-2 bar inside bar, another drop, another bounce, and then all hell broke loose here as the markets got slammed down. Once you took out this low pivot here at 118.50, it was all downhill to the 117.50 level. Once we got below there, then it was all done, folks. You just slammed all the way down on that last Thursday before last and came all the way down to 105 before bouncing. We retested on a week ago from Friday the 200 moving average, then rallied up early in the week. And again, we saw Monday, Tuesday, Wednesday essentially and mostly to the upside or flat, and then Thursday and Friday we began to sell very sharply. Down we came again, almost negating all of last week's gains, but in all fairness, the week was still positive, and we will see what happens this coming week. Now, everything about this coming week as I scan to the intraday chart. I want to talk about the intraday, obviously. This is the intraday SPY. I want you guys to get a good sense about how Friday ended so we can understand how Monday may begin, how Tuesday, Wednesday, Thursday, and Friday will play out. First of all, you have to look at the gap down here. So, again, you sold off into the close on Thursday. You gapped down on Friday. This selling was very indicative of a possibility of some negative action on Friday. Why? Because the market had held up all day long, had tried to push up above Wednesday's highs, and if I scan back or shrink my charts down a little bit, we can see that even more accurately. See here how Wednesday traded up, pulled back, traded up higher, pulled back, traded up higher, pulled back. That was a very strong move on Wednesday. The fact that on Thursday you could go sideways and you couldn't continue to make higher highs. Notice here, higher or a high, higher high, higher high. Even here, double top, higher high. And then late in the day you couldn't do that. That was a very bearish signal, and you sold off into the close. That created the gap down possibility. We gapped down sharply and just continued to sell off. We came all the way down into the master levels here. 113 is a master level of mine. Sure enough, 115 is as well. See how the first candle gets below 115? It breaks. Also, the 200 moving average river in proprietary in the money stocks effect got taken out. And these are all things that if you join the research center or the chat room or even take the webinar, which we had on Saturday, which was fantastic, by the way, great showing, great analysis, go done. That's all stuff we cover here. But in any case, the river technique is broken right here by a gap over it. That tells you that there's probability of further downside. Market continues down to the 113 master level, and sure enough, you consolidate sideways. Then you get a little short covering into the weekend. Why would you see short covering? Well, because last weekend we got $1 trillion bailout on the euro, essentially in the eurozone there. So people saying again, well, there's no point in me sticking my neck out on the line here on some shorts, cover some shorts into the close. So far this weekend, there's been a lot of chatter, folks. Everything about this market, bottom line, it comes to this chart right here. FXE. What is the FXE? We're going to go to the daily of the FXE. This is the Euro ETF. This is how we can track the Euro. Euro, again, getting slammed. I mean, look at the drop here. It's totally opposite the markets. This drop on the Euro, it's totally the same with the markets. The dollar's the opposite. Either way, this sharp sell-off really coordinated. Look at this. 1, 2, 3, 4, 5 straight down days after a little bit of a bounce. That tells us again that this is very, very weak on the charts. It could go a little bit lower, but I have to say this. What I'm seeing over the weekend is a ton of negativity on the euro and a ton of positivity on the dollar. When that reaches a climax, it generally switches direction. So, in personal opinion, I think early in the week, I don't know if it'll be Monday, Tuesday, or Wednesday, but I think early in the week you do put in a short-term bottom in the euro. And again, that's going to be my big call here. We'll check it out next weekend in the weekend technical analysis video to see if I am correct on this. But either way, you have to look at this. Again, I saw covers of various financial magazines with muscles and dollar signs on it, and everything talking about how strong the dollar is, how the euro is going to go to par with the dollar. That may be the case in the long run, folks. It's possible. But bottom line is, it's reaching the climax where everyone's on that side of the trade right now. And we all know that when everyone's on that side of the trade, it generally will not work out. So either way, keep an eye on this early in the week. We'll continue to watch it. Maybe on a gap down Monday or Tuesday, we'll look to buy a little bit. Again, that alert, if I do buy the FXE or if I do short the dollar, that will be given out in the research center. Hot charts and alerts. We have email alerts, text message alerts. You will get that as soon as I put it out. All right, I will literally click the button myself to send that text message email alert out to you guys as I post a trade if I decide to do it. All right, so be ready for that. Join the research center. Get everything else included in the research center for just $49.99. And by the way, we are debuting a No Hype Live page next that will be included in the research center as well. It's just a blowout type thing in that research center. You want to join and get involved right away and learn these techniques. These proprietary techniques we're giving out for essentially free, $49.99 a month. It's ridiculous. In any case, take a look at the dollar. Dollar has soared here. These are your levels on the dollar. I'm not going to go over them as well, as this is more proprietary stuff and calculations for our premium members. But either way, you can see the soaring dollar. That's the opposite of the euro. As the euro falls, the dollar goes up. The kicker here is, even though the dollar's been going up, gold has generally stayed very strong. The last couple days, it started to show some weakness. Why? Because fear of currency devaluations across the board. Not just the euro, folks, by the way. It's just that the euro is getting pounded more than the dollar. Therefore, the dollar has to rise. The dollar, again, the tons of printing of money in the U.S., even more in the Eurozone right now. This is all kickstarting gold to maintain and continue to advance higher. Keep an eye on gold here in the coming days, folks. It's going to be a very interesting trade. Gold should have a pullback if everything calms down. If nothing calms down, gold will continue to skyrocket. So will silver overall, although silver is more of an industrial metal as well, so it has a little bit less of an effect with the demand curve involved there. People needing it for building. If less demand out there for it to build with or to create things with, then obviously that doesn't have as much momentum. Gold is really the only pure play here on devaluations of currencies. Oil, folks. Big chart here. Be ready on oil for next week. This could be another hot chart and alert depending on what I see in the charts. Be ready in that research center. We'll get that out to you as well. And again, a huge, huge week planned here. Lots of more profits. We continue to spin out the profits in the intraday stock chat in the research center, and we'll continue to give those out as they happen. Any trades that we make, suggestions on the Pro Trader watch list of what our pro traders are watching and trading. It all goes out to you, all with alerts. And again, we'll keep an eye on the hidden gems play. Could be a hidden gems out this week depending on how this market shapes up. All right. Again, folks, market got rallied, or I should say rallied early in the week last week, only to sell off late in the week. Overall, a positive week in the markets, but be ready. This is going to be a wild one. Take care, folks. I'll talk to you soon.